We've had Beijing's efforts to try and curb market speculation here. Do you see that as being necessary, and will it have any lasting impact on pricing here? And I just want to ask you if you've been in contact with the authorities also in China with regards to this.
Well, great to be with you. Look, we haven't had any contact from the authorities. In terms of iron ore pricing, there's a number of things that contribute to the iron ore price, including speculative trading on the Dalian Commodities Exchange, and I see there's been an increase in transaction fees. But in terms of the fundamentals of supply and demand, we continue to see strong demand for iron ore and certainly strong demand for our products. We have seen some volatility over the last few months. We're expecting to see activity pick up as we come out of the Chinese Winter Olympics. So we see strong ongoing demand. We're supplying to our customers under long-term contracts. We've got long relationships with our core customers in China. And certainly our percentage of port inventories in China has not increased. So we're actually still at a relatively low level of port inventories. So all in all, we see a supportive environment in the context of demand. There is no new supply coming into the market, so there's no new significant supply coming into that market. So a combination of strong demand, our expectation of a pickup in activity in crude steel production. And we do anticipate that China, probably for the third year, will produce around about 1 billion tonnes of crude steel. And we've also seen a pickup in rest of world crude steel production. So all of those fundamentals point to a market that's supportive of the current dynamics when you look at the demand and supply.
So that naturally, of course, dovetails into your assumptions about prices here. What sort of ranges are you looking at?
Well, we don't try to predict the iron ore price. We do stay very focused on the things that we can control. And let's not forget that we just reported our third highest half-year profit at $2.8 billion. So we're focused on our shipments, and we did increase shipments to a record first half of 93.1 million tonnes, and that was up 3% compared to the prior half year. We've seen an increase in shipments. We have maintained our industry-leading cost position. Obviously, we're facing some of the inflationary pressures across labour and fuel prices and other consumables in our business, but we have an industry-leading cost position. So by focusing on the things that we can control, we've delivered outstanding financial performance. As I said, third record half-year profit, so the third highest in Fortescue's history. So we stay focused on that. Rather than trying to predict the iron ore price, we stay close to our customers. We're delivering the products under our long-term contracts, and we do stay focused on our cost position and maintaining that industry-leading cost position, because throughout the cycles, we generate very strong cash margins.
Elizabeth, as we talk about demand, we have to talk about China. On the one hand, you have a property slowdown. On the other, we're expecting an infrastructure boom. How will this play out in terms of iron ore demand, iron ore prices, as well as Fortescue?
Well, you're right in terms of the property slowdown, but there is an expectation of waiting towards infrastructure spending and a target of achieving 5% GDP growth in this calendar year. So as I said earlier, our expectation is that China is on track to produce about 1 billion tonnes of crude steel, as it did last year and the year before. So the fundamentals aren't changing from an iron ore supply perspective. As I said, there's no new supply. That demand remains robust. We're seeing strong demand for our products. So the outlook at the moment is supportive of the current market dynamics as we see them.
We still have those tensions between China and Australia. Do you think that would eventually impact iron ore prices?
Well, as I said, we stay very close to our customers, and we've got a really multifaceted relationship with China. Not only do we sell product to our customers, we procure a lot of product from China. We have two of our directors are Chinese directors, and we have a range of other policy and other initiatives that means that we're very close to our customers and to our customer base in China. So despite some of the ongoing tensions we've seen at a political level, from an iron ore perspective, the Pilbara is the shortest seaborne journey to China. We've been a very reliable supplier of iron ore to our customers throughout COVID. When other countries have had various restrictions and had various other supply disruptions, we've actually been a very reliable supplier of iron ore to those customers in China. And I think that puts us in very good stead to continue that strong relationship. And as we're seeing that continued demand for iron ore, we're seeing strong demand for our products.
Tell us a little bit about, the focus among analysts about your plans to, at the moment, go more green, as it were, your clean energy plans. Do you have a target for trying to get to net zero here? And how is that actually evolution taking place? How is it taking place within your firm?
Well, we've got an industry-leading target to achieve net zero emissions for Scope 1 and 2 by 2030. And then more recently, we've set a target to eliminate emissions through the entire supply chain to achieve net zero Scope 3 emissions by 2040. So we've got ambitious targets, but they're targets that are backed by the current volatility we're seeing in costs, and fuel costs are a very good example. We've seen a significant increase in the price of diesel. That's contributed about $1 a tonne to our C1 cost performance. So we're actually making, I think, a very smart decision to decarbonise and accelerate that decarbonisation, and that'll be across our stationary energy as well as our mobile fleet. The early stages of transitioning our stationary energy are already taking place. We've seen the energisation of our large-scale solar generation in the Pilbara in the last quarter, and we're on track with our Pilbara Energy Connect project to add another 150 megawatts of solar generation. We're also advancing a range of initiatives across our mobile fleet and our green fleet, particularly those hard-to-abate areas. The team have developed a haul truck that can run on hydrogen. We're looking at the applications across our rail fleet, shipping. So we're very ambitious for decarbonisation. We think we're in a cycle where there'll be a rapid transition to green energy. We have Fortescue Future Industries, which is our green energy company, and Fortescue is transitioning to a vertically integrated green energy and resources company. So we're well on that path with industry-leading targets.